Supplies are hitting a 3-month high in crude, and that has been bringing the prices down. I'm here with Keith Bliss from Catone. You know, I was one of those people standing in line trying to buy gas, so it's hard to believe that we're in a supply, but I know that was a distribution problem. So let's talk about those low crude prices, because that could maybe help our economy, right?
Well, it could if crude comes down and gasoline follows along with it. Of course, at the retail level, then it absolutely will start to help the economy because people will have more money in their pocket. Although you balance that against the prospect of higher taxes, the payroll tax holiday is clearly going away no matter what they do with the fiscal cliff. So we have to balance that out. But right now, there's really three things impacting the price of oil. One is demand destruction taking place with weaker global economic growth. The dollar is rallying, and crude is still priced in dollars, so when the dollar goes up, crude prices will come down. And the third thing, which is being trumped completely by the rallying dollar and the slowing global growth, is the Mideast tensions. I mean, the Syrian civil war may spill over into the borders, and all bets are off, quite frankly, if there's shooting wars between Israel and Syria and Turkey and it spills over into other regions. But right now, those tensions are clearly being trumped by economic events around the world, and that's why we're seeing crude drop in price.
Do we have maybe a floor that crude could go to? I mean, is there a certain number that it finds its bottom?
Yeah, crude, unlike a lot of other asset classes, I think mostly so, does trade very much on a technical level. So the floor on crude right now is about $84. Most people will tell you. So that's why we're seeing it. It pulled back pretty well in the overnight session with Asia. What's going on over there, but then it's kind of stopped here and it's stabilized in this price. I think if we break below $84, then we could possibly see it get down into the 70s rather quickly. But for right now, we're pretty stable. And outside of any noises coming out of Washington today, the legislators are meeting to start their initial conversations about the fiscal cliff. If they come out and say there's no way we're getting a deal done, I think you'll see crude break through that technical level and sell off into the 70s.
All right. As you mentioned, it's a long way between the price of crude on the market and the pumps for regular consumers. How long of a lag is that, roughly?
Well, the price of gasoline never comes down as quickly as it does go up. So depending upon what side of that question you're on, typically there's a 2 to 3 month lag at the price of the pump when you see crude move like that. Again, it's all going to depend upon the demand destruction that takes place in the broader economy. If we see demand really fall off, then that time frame can be shortened pretty substantially. But give it about 2 to 3 months before you see it reflected at the pumps at your retail level.
All right. Well, it sounds like it's a double-edged sword. On the one hand, we benefit. On the other hand, we don't. That's Keith Bliss from Catone, and I'm Deborah Borchardt with The Street.